Hi, welcome to the Market Alert for Friday, the 21st of July 2023. So yesterday, bonds and big tech bullion and Bitcoin breakdown as greenback gains. Yesterday we saw the dollar move back to the upside, Dow's longest win streak in 6 years and the best day for Nasdaq since March of 2021. So despite the fact that the dollar gained, the markets continued to move higher. It says here that stocks sink on earnings as underwhelming low jobless claims ignite dollar and yields. It wasn't that much of a sink in stocks when we look at the data, which we'll do in just a moment. And today we've just got some retail sales data out at 7 a.m. Okay, let's move on. Have a look at the markets. Kick off with the Dow. So once again in the Dow, we can see this moving strongly, taking out the 35,235 yesterday. And we got that new high yesterday of 35,373. Let's go to the monthly chart where we can see that we're above the 78% retracement. We've got that 36,031 that we need to take out. And then we go back to the all-time high of 36,952. There's nothing around to stop this market from moving back to the all-time highs at the time of recording. So long may it continue, as they say. So there you go, you can see this. And once again, we've had this every afternoon this week where the Dow has just taken off from the open and moved higher. There's been no end to it, and it's not going to end until we go back to the all-time high, because that's what the goal is here. That's probably going to be around August, September, and then we may see a different picture. But at the moment, it's a one-way bet in this market, and that's the long side. You get your pullbacks, of course you do, you get your profit taking, because these markets are being run up by derivatives. And as it says in the headline, the one thing that I would agree with here, there we go, earnings underwhelm. Yeah, great, isn't it? So the earnings underwhelm and the market takes off. So again, you know, there's a complete detachment from reality, and this insanity continues. So in the German DAX, slightly weaker yesterday, and you can see that we're still struggling with the 186, the 210 level there, and we've got the all-time high above here. We've already put a new all-time high in for the DAX, which you can see here. Let me just spread this out a bit and bring it down so you can see it there. So you can see we're not far off the all-time highs there, but that's where the market went to. That was the previous all-time high, and of course the new one is there at 16,427. So you can see we recovered this month as well from the beginning when we had a bit of a move to the downside, and you can see for the last 4 weeks sideways, looking to break out. And then in the daily chart you can see that drop at the beginning of July, and now the market's trying to make its way back to the upside. 30-minute charts, we moved up after, guess what, trading to the low, as we always do. See the market coming back, sold off with the Dow in the afternoon and some weakness, and below the DP at the moment. Watch the low if the market does have a shakeout when it kicks off this morning, as this will obviously find a lot of buyers at this level. And in the 5-minute chart overnight, you can see that the market is gapped, but then coming back, and you can see there the DP where the market's been banging its head. So like I say, watch the lows down here, not that far away. It's only about 60-70 points, which is nothing these days in the German DAX. And in the S&P 500, down yesterday, but bouncing off the 5MA overnight at the moment. In the monthly charts of the S&P, like all of these markets, particularly the Dow, you can see that we're through the 78, heading to the 89, and then you've got that all-time high of 4817 there. 30-minute chart yesterday, well, broader market, unlike the Dow. The market had the news and then tried to move higher, and then was met with some selling, with the market trading down to the 200MA and the S2 support. Like the Dow and the DAX at the moment, the market below the DP, which means keep an eye on the low, just in case we get a shakeout to the downside. FT100 also up yesterday. You can see they're struggling with the 200MA, not too dissimilar from the S&P there. And in the 30-minute chart, you can see up from the start when we had the open. Now you can see carrying on from the previous day when we saw a big move in the FTSE 100 above the DP at the moment and the close, and closer to the high than the low, unlike the US markets at the moment. And in the currency, US dollar gaining yesterday on those jobless numbers. Apparently they were low numbers, the weekly claimless count, and the market there just sideways to higher. And in the metals, as I said yesterday, watch for the hammering, and it soon turned up yesterday, and that's why I've marked these downside targets. 200 MA is the first downside target for this market. For me, it'll take these out with no problems, and the 62, despite having the 50 and the 20, because that's what they want to do with the silver market. They want to keep the price suppressed for this net zero crap that they keep putting out, as silver is one of the biggest components in electric cars and solar panels and etc. So the price will continually be suppressed until they stop it from being so. And there you can see yesterday it was fine. Then that bit of news, bang, straight down to the S3 where the market's found a bit of support. But expect the low to be taken out during today. And the same for gold as well. Hammered yesterday. That's why we've got the downside figures there, and that 50 EMA at 89. 1950 is a good psychological level to take the market back to. And in the 30-minute chart, you can see this where the market was sideways, the news, and then they just absolutely hammered it. When the global demand for gold is massive, they just slam the price down with the derivatives and futures and options contracts. Below the DP, and reckon the low is likely to come under pressure during today as well. And in the gold silver ratio, up yesterday because silver was absolutely crushed, and you can see there overnight. So we've also got a bit of a pullback in the gold silver ratio there. So given that we've only got that one economic news item this morning, well, 7 a.m. for the UK retail sales, then the market's going to have to make its own direction. And that's what we're seeing most of the time at the moment, because we've got no major impact news items. Okay, that will do it for this one. Have a great weekend, and I will see you in Monday's edition. As ever, thanks for watching. See you then.